Hello friends, right, we're back and we're looking at Ethereum. And where did we leave off yesterday? Well, actually, where's the prices right now? The price is 133 right now, so let's get rid of that menu and expand the price action out here and pick up where we left off yesterday. And we were talking in yesterday's video about whether or not this is kind of fake out territory down to here, whether or not we're still in this triangle here. And shall we have a wee look and see if it sort of needs adjusted in a minute or whatever? Let's do that. But we've got the two rough areas that we've been known about for quite some time. When the price came back down here towards 123, then started ascending up again, there was the opportunities for any sort of a long there. So say you got anywhere around here and I've come up to here, you're looking at a 10% move again, on this thing. And yesterday's price action, just playing it safe, just taking it from the 236 down to where the prices actually went down to. You had a 7% drop in the prices there for taking profit. So depending on how greedy you are, say you were only looking at 5% moves instead of 10%, then you've got all these opportunities for the last wee while. And hasn't it been great? It's been great. So these consolidation triangle patterns where people talk about boring price action and all the rest of it, it's been great. So let's have a look here at this. We did have a bit of a fake outy type thing there. Let's try and line up a few more bodies to see if this it lines up a bit better somewhere else and gives us more opportunity. Now this is done slightly with the expectation then that I've extended this out now quite a bit in terms of how far into it we've come. And let's just sort of use this as a sort of a cautionary reminder that as you're in these consolidation patterns and things like that, you can often get what appears to be fake outs when it's not really a breakout or a fake out at all. It's just operating within the same pattern consolidation area that you saw before. Then at some point you might then say that we had a breakout and returned into the pattern, if you like, or a fake out and we returned into it, and then be anticipating a full measured move off the back of this thing at some point, maybe prematurely, or maybe you think then that it's happening too late. For instance, if it's like that and it's overextended this price action, maybe you'll even outrun it, or maybe you had it drawn in here all the time and you'd be looking at saying, well, if it had it coming down as far as this and then gone beyond it, then it's front running the thing and we'll get maybe a less satisfying move than you would off the full measured move or whatever. So there's so much different sort of subjective nature to these things. There aren't actually hard and fast rules about them. They're really, there's not. So that doesn't look too abnormal now, and then we're still back inside this area. And what are the key areas really that we're looking at? Well, it's the same it really is as ever. I mean, you don't need to have this on here to be talking about this in any particular way. You've got things like your previous lows down below. If we're coming up here and considering this to be a higher high, haven't had a higher low before, then you're looking to come in and set in a higher low, and that could be anywhere down as far as 122. So the prices went down to 124 or 123 something. So like you've got that higher low coming in here with an opportunity for a turnaround, in terms of flow, manageable risk trades, for instance, and then yet we know that we've got this 236 Fibonacci retracement line in here at the $1.33 area, more or less, where the current price is. So that. So we also kind of can see where our previous high was, and if we're going to come up here and continue to make higher highs, if you want to talk about it like that, and ignore any sort of flags or patterns or pennants or triangles or any of that jazz, then you're looking towards 139 as being like, that's an area where you could anticipate, should the prices break above 133, people taking profit in amongst there, because they'd be considering whether or not you'd actually go for this higher high or not during a time when volume's decreasing and you're not seeing any sort of real sort of conviction on the go, or whatever else. Let's stick the moving averages on. They're not on at the minute. Have a look at where they are. I forgot to have them on in the Bitcoin video. I recorded the video twice, and I still forgot to have them on. Silly me, I'm an incompoop. Anyhow, what have we got to look at here? There hasn't been a death cross, which is what we were wondering about maybe in the past, if we would see one at some point. And let's try and not get too carried away if that happens. In fact, we might even see the prices go up and test off of these things, and that's still some distance away from where the price action is. Towards the upside, if you did get a move beyond here, though, and you're looking for your next potential profit taking target, then 145, where this 21 EMA is coming in at currently, would obviously be a good area for that. Then you've got 150, which speaks for itself, but it's also a Fibonacci retracement number here, the 236 on a bigger Fibonacci retracement, so you've got double down reasons there. And then 155, where we've got that horizontal line drawn in at for a wee while, and it creates pockets and stuff like that. So that's kind of where we're looking. Should the prices go up or down or whatever else, right? That's great, and you'd have known that anyway yourself looking at it, but we can just return back to here because, remove all the FOMO and greed and everything else and just try and say, well, what's going on at the minute? And this is what's been going on. It's what's been going on for a while. As the volume continues to decrease, we're not seeing this breakout volume, like I said in yesterday's video. We're not seeing this re-breaking back in, let's break out towards the upside volume either. You're just continually seeing the volume going down here. It has been for some time since we came to these lows. You can see it's just decreasing. So that all spells consolidation. This line here, the lines definitely look wonky, but as the points that they make and the fact that they're more or less symbolic, and that's why I feel like it's fine to kind of move them around and have these discussions with you about where exactly to put them. If you're wanting, on the other hand, to sort of focus on these things as being sort of gospel, then well, we don't see them. We don't see these things exactly the same way. That's the way I look at it, and it's working quite well so far. So thanks very much for tuning in and for liking and subscribing and all that jazz. What are we looking at here in terms of the price action? Well, I think I spelled it out really in terms of where our potential different profit taking targets are, and this is the inflection point that we're at right now at 133, for instance. So if you were looking for low risk short, you could take one here. Low risk long, you could take one here. And what does low risk mean? Well, it means that you've got a clear area and a pivot point where you can manage your risk around and say, look, if we're going one way or the other, then you'd maybe know it a bit better having gone past this price, for instance, compared to 131 or so that's how that all works. Thanks very much for tuning in. Yeah, share the video with friends, share it on Facebook, all that jazz. If I do it, I'm spamming people and it's bad. Share it with a friend, whatever. And thanks very much for joining me. Welcome to the family. If you're new here, you're now a bona fide Rocky Outcroptician, so that's great. Catch you next time.